There's another big set of numbers. Wipro came out with a very strong set of numbers. Let's hear the chairman out as he addresses the press.
Good afternoon, ladies and gentlemen. Welcome to our campus. We will start today's conference with an opening remark by our chairman. Thank you.
Chairman, maybe your remark.
Morning to all of you. At least we've got a little more hospitable premises now in terms of a press meet. Overall, in terms of our assessment, the environment is stabilizing. I've been traveling quite a lot. I've been in Europe in August and about 2 weeks back in the US, and been meeting a lot of customers and meeting a lot of CEOs of Fortune 1000 companies. There is no question that the economic environment has stabilized. And going forward, things are looking much better than what they have looked in the past 1 year. I think there's more confidence in the system. I think customers now are back to decision making. That's not to say that there is a huge amount of optimism in the marketplace, but there certainly isn't pessimism in the marketplace, and that's a very welcome change from what we have been experiencing, particularly over the past 12 to 15 months. Our demand visibility so far as Wipro is concerned has improved, and we are seeing pricing stability. Hopefully going forward, we'll also see volume increases in terms of increased physical demand from customers. Emphasis continues to be by customers on savings on operating expenses, savings on CAPEX, capital expenditures, shorter cycle times, and more transformational offerings from people like us who are able to do new things for them to make them more efficient with their customers. Everyone is driving more for less. I mean, that's really the mantra of the world today. In this context, Wipro posted a 19% year-on-year growth in profits and a 6% year-on-year growth in revenue for Q2. Our IT services business was at the top end of our guidance in constant currency and exceeded guidance by 1.2% on a reported currency basis in dollars. Our pipeline is the highest that we have seen, and order booking is strong, has been strong and will be strong going forward. We continue winning larger deals, many of which we have announced, some of which we are not permitted to announce by the customer, and much more of end-to-end integrated deals. Our deep domain expertise across verticals and our broad set of services continue to position us as a partner of choice with our customers. We have seen strong growth across our service provider space, strong growth in energy and utilities, strong growth in healthcare and services, and we are starting to see now acceleration in our financial solutions businesses. We are seeing bottoming out of telecom and the technology verticals, although pickup in growth in these verticals will be gradual, but we are still hopeful that we will start seeing it. Across service lines, BPO continues to benefit as customers drive down costs, and our end-to-end capabilities in infrastructure space supported by infocrossing capabilities is seeing very strong traction and very strong demand. Our commitment to drive operational efficiencies remains as strong as ever. In the more for less environment, this is, in our opinion, absolutely critical. We continue to execute on this and have shown improvements in productivity. We have shown improvements in fixed price project mix. We have shown improvement in utilization, which has also led to increase in operating margins. Our margins this quarter have further benefited from gains in Forex. We continue our investments in non-linearity and are driving this across the breadth of the organization relentlessly. It has complete top management attention and top management review on an ongoing basis. Our investment in solutions, end-to-end capabilities, new commercial models, managed services, accelerators, amongst others, are all helping to drive relentlessly non-linearity. We are committed to globalizing and committed to ramp up our local global delivery centers. Our headcount in our global delivery centers is now about 3,400 as of end of Q2, and this is getting added on further aggressively. We added 300 people this quarter, majority of them being local nationals. We continue to invest in front-end domain-led advisory capability through build-up very successfully of Wipro Consulting. We made some important investments here in the last 2 quarters, hiring the right mix of high-impact partner-level profiles who are able to sell our end-to-end consulting and IT services capabilities to our customers. We are already starting to see benefits here, not only of the consulting order book, but also the downstream IT revenue that it is accumulating. On the non-IT side of the business, Consumer Care had another strong quarter. Our international business had a great Q2 with leading growth in Vietnam, leading growth in China, and leading growth in Indonesia. Santur, our flagship brand, remains the #1 toilet soap brand in South India. Our infrastructure engineering business is also seeing some stability with a surge in demand in the Indian market, including for our new eco-energy business. Wipro was in a joint second position globally in the list of top 5 green electronics brands as per the latest edition of Greenpeace Guide to Greener Electronics. Our commitment to sustainability-driven growth remains as charged as ever. We have stepped up our commitments in CSR. I will now request Suresh Senapati, our CFO, to share the financial highlights of the quarter, and we'd be very happy to take any questions from you. Thank you.
All right, that was the chairman of Wipro reiterating those very strong set of numbers. He was talking about telecom as a vertical that didn't do so well, but he's seeing a bit of a bottoming out and how it may possibly see a bounce back. Of course, they have had a tremendous margin expansion in their services business to about 23%, and this has been a good number to